Hey traders, how to identify key levels, how to identify supply and demand zones, how to identify support and resistance. In this video I will teach you how I identify key levels. We will analyze gold together and I will show you how I identify key levels with multiple time frame analysis. Please don't forget to like this video, subscribe to my YouTube channel, and let's start. Alright traders, in order to teach you how to identify key levels, we will analyze gold. And first of all, let's define what time frames do we apply for structure analysis. For structure analysis, we apply the so-called higher time frames. And by higher time frames, I mean weekly and daily. So we will start with the weekly time frame first. We analyze the key levels on weekly, and then we go lower and analyze the key structures on a daily, and then we combine the structures that we spotted in the weekly and on a daily, and based on that we make our predictions and trade. Hey traders, don't miss a big summer sale on my premium educational group. Until Sunday you can get a lifetime access to the group with the 40% discount. You will get an access to my daily live streams, you will get my video course and ebook, and as a bonus you will get a lifetime access to my premium signals group. For more info, check the link in the description below. It is vasilytrader.com/private group, or text me in one of the social networks. I will give you more details. Don't miss your chance, traders. We are on a weekly chart, and on a weekly chart, the first thing to identify the key levels accurately is to draw the impulse legs. What you do, you identify the lows and highs, and based on them, you draw the impulses, the impulse legs. You need to see how the price acts, you need to see how the market acts, you should see which levels the market respects, from which levels, from which structures the market initiates strong bullish and bearish movements. You can see that we do that quite quickly, and just after 20 seconds of drawing we identify important impulses, and based on those impulses we will look for key levels. Your task is to identify the points that were very important for the market participants in the past. And once you identify them, we will assume that in future these structures will be important for the market participants again. And here let's start with highs. Yes, let's execute the top to down approach, and let's first analyze the highs. Here we have a very important high, and you can see that from that exact level the market dropped sharply in the past. Yes, from that level the market dropped like crazy, and you can see how strong bearish movement initiated from this structure. So here we have a key level, it is key resistance, and let's underline the key levels on the weekly chart with yellow boxes. So here's our first resistance. It is just one single level from where the market dropped. The next structure that we can identify is the level right here. You can see that from that level the market dropped sharply. Yeah, from that weekly high the market dropped, then the market retraced, yes, set a low high, and from that low high the market dropped sharply, setting a new low. So again, that structure is phenomenally important, and let's underline that with the yellow box. Then very peculiar zone. Take a look, traders. The market respected that structure in the past, that structure in the past, that structure, that structure. Yes, a lot of structures lying very close to each other, and if we draw the levels based on these structures, you can see that we have a lot of structures like right here lying very close to each other. It is the so-called zone of supply. Yes, it is the zone that unites multiple key levels. Yes, and in order to identify, in order to underline that zone properly, we just take the upper boundary of that zone and the lower boundary. Yes, here is our supply area, and the levels in between we just take away. That is our zone of supply, and the market may drop from the entire area, from any point within that yellow area. Yes, that is the supply zone. Now let's go lower. Again, take a look, traders. The market respected that level, that level, that level. Yes, you can see that just recently we started to fall from that structure. Again, we have three structure levels lying very close to each other. And again, it is the so-called supply zone. Yes, you can see that just in the recent past, the market bounced from that area. Yes, you can see how nice the buyers were buying the structure. And of course, after the breakout, the structure turned into a very strong resistance area. Yes, so here's our next structure, and just that level in between we take away to make our chart clean. Then, very interesting right here, you can see that the market respected that level multiple times in the past. Yes, we can draw the horizontal line. Yeah, you can see that here we got very nice price fluctuations in the past. But that structure is no more valid for us. Why? Because you can see that the market dropped it. The market broke that structure to the downside. Yes, and we haven't seen any reaction from that structure. And then retesting the structure, the market did not react to the structure again. Yeah, so it looks like the market participants just forgot about that area. So we take away that from our chart. Same thing with that level. Take a look, traders. You can see that even though in the past the market participants were buying from that support, you can see that right here the market broke below that structure. Yeah, not reacting to that, and then retesting that new reaction again. So we take that structure away. The last structure that we see unites this levels, yes, lying very close to each other. It is our last key weekly structure that we see. Yes, very important structure right here based on this multiple lows. Yes, it is a very important narrow zone of demand. So these are key levels that we spotted on a weekly. Now our task is to analyze a daily time frame and look for key levels there. Now we are on a daily time frame, and you can see that I took away the impulses that we spotted in a weekly. On a daily time frame, we should identify the impulse legs again. So let's start with the highs and just draw the impulses. Let's just analyze the price action, and let's check how the price acted in the recent past, because you can see that definitely on a daily time frame we can see more detailed price action, right? So the point is that most of the levels that the market respected on a daily we already spotted on a weekly. But take a look. Here we also have a peculiar structure. You can see that even though we didn't spot that level on the weekly time frame, still it is very important, and you can see how sharply the market dropped from that level and how nice bearish move the market initiated from that structure. So let's underline that. By the way, you can see that now our boxes are orange. Yes, let's underline daily levels with orange color. So that is the first strong resistance that we spotted on a daily time frame. Let's check if we have anything else right here. The point is that when you analyze key levels, you should not forget that we have vertical key levels and horizontal key levels. And here I see a peculiar trend line. If we take that high, traders, and draw a trend line, you can see that here we got a very nice major falling trend line. And in the past, it was a very strong resistance. And you can see that that trend line was broken to the upside, and you can see how nicely it turned into support. So I would suggest underlining that that trend line and considering that to be a key vertical support. Yeah, so if the price drops to that, we'll expect a bullish reaction from that. So these are the key levels that we spotted on a daily. I took away all the impulses again, and finally we have our key levels on gold. How do we apply these key levels? Once one of these key levels is reached, we will expect a bullish or bearish reaction from that. From support, we expect a bullish reaction, and from resistance, we expect a selling reaction. You can see that just recently the market reached that key weekly resistance, and in my free Telegram channel, we already spotted multiple bearish clues right there. Once one of the key levels is reached, your task is to always look for confirmations. Yes, for some confirmations, preferably on intraday time frames. And what can be a confirmation? For example, you can see that here in gold, the price broke the support line of this bearish flag. Yes, and as we know, it is a very important bearish clue, and most of the time it leads to a strong bearish reaction. So you need to look for confirmations, because occasionally the market breaks key levels, like right here. Even though we got a very strong demand cluster right here, you can see that the market broke that TDD on side easily. So your task is to look for a confirmation first before you open your trading position. Or you can consider breakout trading after the violation of that weekly supply area to the upside. That area will turn into a strong support. Yes, and you can consider buying that. So there are a lot of different options to trade key levels. The point is that being a technical trader, being a price action trader, we always trade from these levels, and we make predictions based on these levels. So it is very important for you to learn how to identify them correctly. Right, traders, so that is how we identify key levels. I really want you to practice key levels identification, because in my view, structure trading is the most accurate way to trade financial markets. If something is not clear in my analysis, remember that you can always ask me questions in the comment section on YouTube. I always reply. Also, traders, don't forget about big summer sale on my premium educational group. 40% discount until Sunday. Don't miss your chance. Also, traders, please like this video, subscribe to my YouTube channel, and I will see you on the weekend.